The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Of Zacks ranked buy. I am Brian Boland, and I am the aggressive growth stock strategist here. And I've got two more stocks for your aggressive growth radar screen. So let's jump right to it, shall we? We've got Amazon as our first name here. And Amazon, there we can see the name of the company. AMZN is the ticker. It's a Zacks rank, a number one strong buy. It's just about all of these aggressive growth stocks will have. And we've got an A for growth and a D for value. And I love to see that divergence. It tells me right away that I'm on the right path because growth investors and value investors are inherently looking for different things. So we all know the story of Amazon. They sell books and maybe a few other things. It's the everything store. They sell a lot of everythings. But obviously there's a lot more to it. But let's just go to the what we know about, how we look at these things. So we start with the earnings, then we go to estimates, then we go to valuation. So estimates, there was a miss 4 quarters ago. Then there was a beat, and then we have this pattern of a big beat, an even bigger beat, and an even bigger beat. That's great to see when we have something like that. We want to make sure that management is able to tell Wall Street, guide them to a bright spot, and then beat it. But accelerating those beats is just another layer to the cake that you love to see. All right, so estimates following the most recent earnings report have moved up here. 39 cents to 49 cents, 48 to 58, and $1.55 to $1.88 this year, and then $2.33 to $2.62. Love seeing all of that. I want to skip ahead just to take a look at where the estimates have moved now for top line growth. 10% this year, 12% next year. So growth continues at a fairly high clip because look at this base that we're talking about. We're talking about $568 billion in sales this year, $641 billion next year. That is a lot of sales. So what's going on here? Why is this multiple so sky high? 75 times forward earnings, which is a ton for only 10% top line growth. But I mean, that's a lot of price actual absolute dollars growth. Our price to book is nice and high at 8.65. That's why it's keeping that very low growth or value score. Price to sales at 2% now are 2.7 times. So this is what I really want to talk about here. We've got operating margins for Amazon. They are moving higher. We got 1.4% to 1.6%, 2.6% basically we'll call it. And the idea is that they laid off a lot of people at the beginning of the year. You're seeing that margin influence happen right here. So when margins move higher, and the stock is already making, they're already making money, there's the opportunity to really get more EPS here. Certainly the dollars per share will increase dramatically if Amazon decides they're going to move from 2% to 5%. And they've always had that ability because they've kept prices artificially low, selling lots of things at either break even or near loss, and then being, the whole backbone of the company being helped by the AWS computer service. So that's what's going on here. So, if you're a long-term person, this is something that you got to look at, So stock has come down in that tech recession that we had. They cut layoffs. They did all these other things. Okay, and it's come back up very quickly, very sharply. These estimates might prove to be pretty low. I mean, especially when you consider where this estimate was, just a year ago. Especially with the, we're gonna start looking at increasing margins for Amazon. So that's Amazon, AMZN. And let's go to our next one. We're gonna stick with the high tech story here. We've got Uber Technologies, and that's UBER. How many dots can I screw up on this? All right, so it's a Zacks rank number one strong buy, as these basically all are. And it's got an A for growth and an F for value, and that's that big divergence that I like to see. So Uber, obviously, it picks you up, it takes you around in someone's car. but doing lots of other neat things. The Uber Eats, there's all these other things. So we see, boy, oh boy, this is straight up here for a couple months, and then they sell off on the earnings report, even though there's a beat. Let's go ahead and get into the numbers, as we love to. And when you jump at it, you see Amazon beat at this quarter or missed that quarter. But then look at the giganticness of that beat, followed up by, I barely made it over the hump, and then big monster beat here. And I love to see this when Wall Street's calling for a loss and the company turns and makes a profit. That's how I love seeing those quarters, kind of breaking the narrative, if you will. And look what it's done to estimates here. So 4 cents to 5 cents to 13 cents, great up. 11 to 12 to 16, great up. 7 to 10 to 42, went a little high there on that. And then 84 to 88 to 105. Love seeing that. That's good stuff. Where's our growth at? We think about the Amazon growing off a big base, 17%, 18%. So we still got growth intact. Still a really big number here, 37 billion to 44 billion. So things are growing. Here we go for the valuation. We're at that stiff point. I mean, apparently they're looking for Uber helicopter or something with this multiple. That's pretty insane. It's just very high. I don't want to say insane. All right, so 14% top line growth, 107 times earnings, 9.75 times book, which is, again, a lot. But right in the line with Amazon, though, for price to sales, 2.6, 2.7. And you see their operating margin really starting to turn the corner here. Even though the company is posting positive earnings, there's still some embedded losses there for whatever reason in the accounting hocus pocus that we all know and love. All right, so a different story here. We've got estimates all hanging out way up top. Tech recession from 21 to 20, 22 to 23, and then abrupt turnaround, much like in Amazon as well. Beats. I'd like to see those. So where does it go? It could clearly get back to your post COVID times, your COVID lockdown times high, where we thought no one's going to have a car anymore for some reason. All right, so keep those two stocks on your aggressive growth radar screen. It's Uber and it's Amazon. And make sure next week that you come back for 2 more aggressive growth stocks. And until then, go to Zacks.com/promo for all of our latest promotions.